Hey everybody, welcome back to the channel. Happy Friday to you. Yes, I'm trading natural gas today, and yes, I captured it live, so I'm going to show it to you and I'm going to break down the trade. I'm going to talk about why I liked it, how I'm going to manage it, and what I think it's going to do moving forward, so I'm excited to dive into that. We're also going to talk a little more natural gas, UGAZ and DGAZ, and see what happened today, but it's the perfect marriage. It's natural gas blending with episode number 2 of the Small Account Options Trading Challenge. So stay tuned. So I'm really excited to share with you today because I'm getting more comfortable with the Tastyworks trading platform. And again, if you're interested and want to open an account with TradingWorks, go to the description below and there'll be a link. Use that link and fund your account with $2,000 and you'll help support taking trades. So I appreciate that. Now, moving into this trade, I caught UNG, which is the United Gas Fund. It's an ETF. I'm going to show it to you in a second. I caught it under certain conditions, and so I decided to put on a trade in the Tastyworks platform. And it's so smooth putting on trades, taking off trades, seeing all the information that you need. So it was a very nice trade that I want to show for you guys. I flipped on the camera, I filmed it, so it's going to be great to be able to show it to you and break it down. And then after I talk specifics, we'll dive into UGAZ and DGAZ. So let's dive into the charts. Welcome to Tastyworks. Here's the platform. I've got it open. The ETF I traded today was United Gas Fund. You can see it, United States Natural Gas Fund. This is an ETF. Ticker symbol is UNG, which you just type up here in the Tastyworks platform. And as you can see, we're at all-time lows, like we have already known. Natural gas is down no matter what you're looking at. So you can see this one, we're still very low. Lots of volume being traded, so it's a very liquid product that's easy to get in and out of. And the bid-ask spread, if you look at it right now, is 1765 by 1766. So very tight spreads, very liquid, easy to get in and out of. And what I decided to do today was to go ahead and put on another put spread. Now, we talked about this the other day, and I explained that when you have a put spread, what you want to do is, first of all, you want to be bullish in your sentiment. So for me right now, I think that over the next 40 days, this UNG is likely going to move back to the upside. I don't want it to go any lower than a certain amount, which will be my strike price. I'm going to show that to you right now. So if I come into the trade tab over here, it opens up the options chain. And what I chose was January 24th as my expiration date for this options trade. And that's 42 days away. So if I open that up, I come in here, and this orange line is right where it's trading now. So you can see $17.66. Here's $17.50. So we're right over that. $17.50, here's $18. So I want to go ahead and sell premium on this. And here's the reason why this is attractive. Not only is it down, is it way beat up, and it's not as likely to keep going down. It's likely it may move back to the upside. But in addition to that, look up here, my IV rank, which this is the implied volatility rank, where you're basically ranking volatility against itself. So where it is right now for implied volatility is about 58% of where it's gone in the last year. It's gone to 0 and 100% on the IV rank, and right now it's about 58%. Now, what I like to stick to is anything over 30% IV rank is appealing to me, because when you have more volatility, which is what this is a measure of, more volatility means higher premiums, which means more profits for selling premiums on ETFs like UNG. So here's what I did. I said, okay, I don't think that the price on UNG is going to drop below $16.50. And so I decided to go ahead and sell 2 contracts. I sold 2 puts at $16.50, but at the same time, I bought 2 puts at $15.50. So these are $1 apart. And what that means is I want the price action to stay above $16.50. That's the perfect scenario. Let everything run out the clock and let the contract expire after 42 days. As long as we're above $16.50, I just keep the credit and everything expires. Now, if it drops and goes against me, the max I can lose on this is between 1650 and 1550. That dollar range is the max I can lose, because if it goes below 1550, then this put right here that I bought will protect my downside. Now remember, when you buy a put, that means that you get paid for anything that goes lower than 1550. So I have downside protection there. If it goes to zero, I'm protected from 1550 all the way to zero. So I set up this put spread, and I went ahead and I was able to collect about 34 cents. And I'm going to play that for you right now, the live trade. But I wanted to be completely transparent with you guys, because I told you when I started this small account challenge, I wanted to be completely open with everything. So I'm going to do just a quick update on my positions. So I'm going to open the positions tab here. And you can remember from the other day on episode 1 of the small account challenge, which if you click right here, you can watch episode 1. I highly encourage you to do that, because you'll be able to see this trade, the CGC trade. So right now on CGC, we're up $20 on the open of this trade. So we're just sitting back, we're watching it. If I open it all the way, we're 42 days out from expiration, so we're just going to sit tight and wait to get to 21 days before we start to make any decisions. So that's looking pretty good right now. And overall in the account, if I open this accounts tab, you can see over here some of the information about the amount I have in the account. Now I started with $3,000 just a few days ago, and if I open up my balance, you can see right now I have $3,121.13 in this account. So things so far have been going really, really great. The account's growing. I'm putting on small trades. I'm just trading small but often, because I don't want to get too large in any one position, because I don't want to blow up the account or take an unnecessary loss. And if I trade small, I still have capital to put on other trades as they come available. So these two trades were both put spreads. We sold put spreads for premium, and we liked them both because of the IV rank. CGC, you can see right here, IV rank is 69, well above 30. If I click on UNG, IV ranks 57.8, well above 30, so we're good there as well. So let me go ahead and fire up this video for you, and I'm going to have you watch this trade live, and then we'll talk more about it. Hey everyone, I've got UNG up on the daily chart. This is the United Natural Gas. You can see right here, United States Natural Gas Fund. This is an ETF that tracks natural gas. We've talked about this in the past, but I got a trade for you. I'm looking at this. You can see the IV rank is 57.5, which we like. We like to see it above 30. So this is acceptable for selling premium. So what I'm going to do is I'm going to put on an options trade here. I'm going to put on something called a put spread. I'm going to sell a put spread. So I'm going to go into the trade tab here in Tastyworks. And if you want a Tastyworks account, you can hit the link in the description. It'll take you right to their website. You can sign up for an account, fund it with $2,000, and then taking trades will get a referral credit, and it'll really help us out. So we really appreciate that. I'm going to come down to 42 days out for an expiration, January 24th. I'm going to open that up. This is going to open up our options chain. And looking in here on the delta side of things, I like the 30 delta. And as we talked about before, a put spread is also called a short put vertical. So I come in here, I select the short put vertical, I click go, and it throws the two legs out here for me. Now remember, we're on the put side, not the call side. So I'm going to go ahead and sell. Let me move this out of the way. I'm going to sell the 30 delta put at 16.50 for strike price. And then what I want to do is drag this leg down to the 15.50, and you can see down here my max profit's going to be $35. The max I can lose on this trade is $65, and my buy power effect is $65. So in a small account, this is super ideal because it keeps your buying power or BP effect very low. Now what I want to do is, you can see over here I have one contract. I actually want to bump that up to 2 contracts, so I use this quantity tab. You can see that changed it to 2. And now my max profit is 70 bucks. My max loss is $130. So I've got better than a 2-to-1, which is ideal in my opinion. I like that. I've got a dollar wide wing here on the put spread.
So I'm just going to check over last minute things. What I like to do sometimes is just knock it up 1 penny to 36 and see if I can get a nibble there. So buying power effect 130, max profit is 72, max loss 128. I'm going to review the order. We're going to look it over. We're going to see our trade costs. We're going to see exactly what we've got going on here. You can see what your fees are going to be, and then I'm going to go ahead and fire it out. We got it working. Let's see if we can get a fill right away. You can see our 2 tabs showing that we're working. If it doesn't come up soon, then I'm going to go ahead and drop that back down. Doesn't look like it's going to fill. I'm going to right click, click replace order. I'm going to drop it to 35 cents, and I'm going to send that out. It canceled one order, the other one is now working. So now we're just going to sit tight. We're going to see if we get the ding. Okay, we're going to replace one more time. We're going to try and get it for 33. There we go, we just got filled. So we just got filled at 33. You can see our position now is on. If I open this up. All right, so we got filled at 33 cents. That's our second position now in the Tastyworks small account challenge. All right, I promised you some /NG that we'd look at some UGAZ, some DGAZ, just check out what happened today. So we will run through that real quick. I have to say, these levels are holding up. We got rejected again off the top of the channel, so it looks like we might be pinballing in here a little bit. Who knows how long that's going to happen? We got to wait for a breakup or a breakdown before we make any more decisions on /NG. If we jump over to UGAZ, let's see what it's looking like. And it didn't get rejected by the top of its channel. It did that yesterday, pushed up into it, then pulled back. So we're just sitting tight. We're just going to see what happens. We're getting low range on each candle, so not a lot of action happening, but overall we are going to end up sort of green on the day after gapping down. So we'll just have to wait, see if we get a break back above, and then we'll make decisions moving forward from there. As far as DGAZ goes, DGAZ is down again today, but it did gap up. If you took profits early in the morning, you'd be looking good, as now it's kind of sagging back down. This could drop and bounce off this level right here around 155.75 before going back higher. If we do move up first, you got to watch for this overhead resistance because you could get rejected and then pulled back down, so we got to watch that as well. Let's jump over back to /NG for a second and see exactly what's going on at /NG. Just to give one more quick look here, just to see if we have any other support levels we can pick up. Yeah, it's just going to look like a little bit of pinball action. So we're going to go ahead and just stick with that as our breakdown and analysis. I hope everybody was green today. Tune in again tomorrow and we'll get back after it. And if you want to try out Tastyworks, I invite you to. 17 people have signed up for an account but haven't funded it yet. So wherever they are, fund that account. Let's get some referral credits going, because if we get enough referral credits, I'll be able to share some exciting news with you. And let's keep those profits rolling. We'll see you later.